Hello and welcome to our shareholders and viewers. In our webinar today, we'll be discussing Fobi's financial highlights. My name is Dev Seidel. I will be the host of the webinar today. Along with me, I have Rob Anson, Fobi's CEO and President of the Board, and Annie Chan, Fobi's CFO. The agenda of today will be as follows. Annie will start by going over the financial highlights. Next, Rob will provide more details and insights on how these financials relate to Fobi's business and talk about recent milestones that the company has completed. We will then finish off with a Q&A section. We have taken the previously submitted questions and architected the presentation to answer those questions. If you've not previously submitted any questions by email or through the form, we'll be taking questions using the Q&A feature. So this is a feature built into Zoom. You can use that feature on your bar below to submit any questions that you may have. This webinar will be recorded and posted on the website later for review and sharing. So I'm going to start off today by passing it off to Annie.
Thank you very much, Dev. Good morning, everybody. Thank you very much for tuning in today. Fiscal 2022 represents the company's first full year of revenue generation. The company earned revenue of $315,000 for the 3 months ended March 2022 and $1.8 million for the 9 months ended March 2022. The increase in revenue is largely due to the acquisition of 2 revenue-generating entities. Passcreator was acquired in April of 2021, and QPost was acquired in October of 2021. Operating expenditures was $5.86 million for the 3 months ended March 2022. I want to take a pause here and emphasize that the $5.8 million includes non-cash items, namely amortization and share-based compensation, which accounts for over 50% of total OpEx. For illustrative purposes, this pie chart shows the OpEx breakdown, where the right side of the pie are non-cash items and account for more than half. I want to take a moment to explain why the non-cash items have such a large balance, starting with amortization on the next slide. Amortization increased from $12,000 last year to $862,000 for the 3 months ended March 2022. The increase mostly relates to the acquisition of QPost. The fair value of the acquisition was recorded as an intellectual property on the balance sheet. The intellectual property is then amortized over a 3 to 5 year period in accordance to the company's accounting policy. I want to stress that a large amortization is not indicative of QPost being impaired, but rather the company's adhering to its accounting policy. The other non-cash item is share-based compensation, where share-based compensation increased from $175,000 last year to $2.1 million this year. As many of you know, stock options granted are fair valued using the Black-Scholes model. The Black-Scholes model estimates the fair value of options based on volatility and historical closing price. Because Fobi stock had a large ramp up over the years, the value assigned to each option assumes the same volatility and ramp up will continue, resulting in a large value. As many of you know, EBITDA is not a permitted metric under IFRS reporting. I wish it was, because it would have allowed readers to better assess the cash profit or loss of the company. With that being said, though, it is possible for one to compute it on their own. We reported $5.4 million loss for the 3 months ended March 2022. The amortization and share-based compensation, being non-cash items, are also separate line items on the financial statements. If we are to remove the 2 items, the EBITDA loss that we would have reported for the 3 months ended March 2022 is $2.38 million. Total assets increased from $11.6 million as of June 30th to $12.8 million for March 31st. Of the balance, cash and cash equivalent is just under $3 million. Intellectual property of $4.4 million includes the acquisition of QPost. Intangible assets and goodwill includes the acquisition of Passcreator in April of 2021. And we close off the quarter with a positive working capital of 4.4 million. That concludes the financial highlights.
Thank you, Annie. I'll pass it off to Rob now to discuss the products launch this quarter.
Yeah, good morning, everyone. This was a key quarter for us in many ways on new product launches, as we saw with our Checkpoint being the #1 product with great penetration and 2 early stage customers that we'll touch on in a bit here. Bolting that into our venue and access management with event ticketing and verified credentials was key. We launched the Adam Hadwin Fan Pass for fan engagement for a professional Canadian golfer. New access and healthcare solutions, both with Empower Clinics and Dragonfly, as seen in our webinar that we hosted together. And of course, the big relaunch of the grocery coupon network, which is part of the Qples acquisitions that we acquired. Alt ID was another significant product launch for us as the world's going through significant digital transformation, and proof of identity and access is playing big parts now in various smart city projects and other infrastructure. PassPro is really our true enterprise grade wallet pass SaaS platform, which for us, we're simply launching in a new direction off of PassCreator's DIY model. The SaaS enterprise solution leads to an upside and significant revenue for us as a company moving forward. A few contracts for us to discuss in this quarter here. Multi-year agreement with coupon leader Vericast. Of course, as we saw for those that saw the press release today, with the launch of 8112 on the horizon, for us is a very significant deal. And we look to give further guidance as the quarter moves ahead with 8112 and the impact of what this truly will mean to Qples and Fobi. Strategic partnership with Bardic Technologies, which is the leading point of sale system in Canada for liquor, beverage, and cannabis. Fobi integrated, of course, as you saw, direct integrations with Square, which has led to a few early stage opportunities that were won by our sales team, and given us some early scale with Square on our partnership and integration. $300,000 annual license with global insurance provider. The insurance is an opportunity for us that we are heavily focused on. This quarter has really brought definition from going early stage wide as possible to now seeing the penetration, refining our story and product stacked to meet those opportunities and verticals. M&A, of course, ramp up of PassCreator and Qples, PassWorks and PassWallet, now working through Basket, as we've seen in our most recent press release, provides us a path to not just increased revenue opportunities, but truly a definitive element to what we're doing in various different verticals today. The combination of data intelligence, combination of mobile digital wallet technology, and of course, activation with CPG retail is truly defining a differentiator for us now that we press pause and fully integrated all of our acquisitions to date. We will continue to look forward for M&A opportunities. We're now looking, it's shifted a bit for us, as kind of the bar of the puzzle pieces as to what we were looking for has been set. The opportunities now, of course, we'll look for strategic, synergistic alliance that are cash flow positive and with EBA. And this gives us opportunity, of course, to ramp up our broader revenues, not just for next quarter, but moving into our year end, June 30th for 2023's forecast. So as we saw today, this was a very important quarter for us, and I fully understand that there's a lot of people that were shocked at the retraction of the reported revenue Obviously, there's many variables that go along with that, with IFRS and reporting as far as the projects and when they launch and what we can recognize. This quarter, we launched Checkpoint, as I said on the previous slide, and we had 2 whales right out of the gate. For us, these were game-changing opportunities that we would leverage and have leveraged since implementation. With the NASDAQ and Oscars, of course, we put true dedication and team focus onto these projects as we understand the credibility that this brings to not just the platform, but the size of the opportunities and the business pipeline as a result thereof. When we look at 8112, this was the sole reason why I went to acquire Qples, quite honestly, because there's very, very few opportunities and catalyst moments where there's a new defined standard, the ability of which Qples is delivering to transition from legacy 8110 to now mobile app and digital formatting with the wallet. This is something that puts us in a very strong position. And with our deals with Veracast and others, puts us in a very strong position now for monthly recurring revenues moving forward on launch of 8112. This is a very, very big moment for us, as you see in our press release today, with instant doubling of business size and scope, and more importantly, revenues for the Qples platform. At early stage, as everyone's very well aware, the transition from old to next evolution is very costly for these organizations as they're not built on an agile format. Our ability to provide a gateway from legacy to new puts us and has put us in a very, very significant position. This was why I was on record when we made the acquisition of Qples as to becoming our largest immediate source of revenue exponential growth. And this is what we look forward to with the launch of 8112. Sometimes you have to press pause. We look at everything as to long-term best interest of shareholder value, company value, and viability, of course. And as I said, this quarter for us has really truly been about recognizing the long game now as to the products of which we're moving forward with and focusing on, and more importantly, seeing the market penetration. So as everything doesn't seem like it was positive on the back end and forward looking for the future, this has been a very pivotal quarter for us as an organization.
All right, we'll move into our Q&A section now. Start with Rob on this first one here. Rob, in today's press release, can you please further explain your quote? Rob, before you get into that, do you mind just giving a brief summary of what that quote was in today's press release before you answer that question?
Yeah, as David, it relates to kind of what I just said here. You know, we're here for a long game. This is the exact manner of which we're addressing and approaching and assessing all of our decisions, especially now with Annie on board, having the finance team and looking at the viability and profitability and of the focus and development and pricing has been a tremendous benefit to the company. And this is where collectively sometimes you have to make, I think you have to have enough courage to make conscious decisions that aren't short sight gain, they're the long game. And this is the way that we've been focused now, you know, for quite some time for the company, preparing and maximizing, you know, value of the assets of which we've acquired in past Creator and Qples and past works. You know, this is where we needed to put the time in for integration to have true interoperability amongst all the platforms. But more importantly, to set up here for 8112. This is a once in a lifetime opportunity for us that we've dedicated the work to put us in a very significant position now. And as this unfolds, this leads to great prosperity.
There are quite a few questions in the section asking about previous pilots. Rob, can you give us an update on some of these previous pilots?
Yeah, we'll have in I think it's next week or the following week, a very detailed update as to the progression and status of various pilot projects as we've announced in the past. So stay tuned for that. As well as that will be the guidance as to, I've said, the refinement and focus and penetration, and that will be shared in a further corporate update.
Okay, another one here is, are you able to break down the receivable makeup? Annie, I'm going to direct this one towards you.
Yeah, for sure. There is a note in the financial statements, note 4, that shows the breakdown. The 1.9 million includes 834,000 in GST recoverable and 1.1 million in trades receivable. The reason why GST receivable is large is because we haven't been diligent in filing our GST returns in a timely manner and collecting refunds. And this is a function of not having a finance team in place. We had a part-time CFO, and that was the entire finance team. We do have a finance team now, and we will be submitting all the GST returns, and we will be getting the recovery. With respect to trade receivable, the increase is also partly due to the acquisition of Qpos in October of 2021. As you know, Qpos is revenue generating. Revenue means there is accounts receivable. And the total of 1.9 million in receivable is also good news because when the amount gets collected, it's going to be added to Treasury.
Thank you. Another one here. Can you speak to the existing warrants and option pool? And I'm going to direct that one to you as well.
Sure. As of March 2022, we have 6.6 million warrants outstanding. 1.5 million warrants were exercised after the quarter, adding to Treasury. The remaining 5 million warrants will expire between 2022 and 2023. And the warrants that are expiring in 2022 are all in the money, and we do expect them to be exercised. With respect to stock options, we have 50 million options outstanding today. We are on a fixed plan, and while we have a healthy amount of room that's available for grant to towns we bring on in the future, we are being very careful because, as you know, a fixed plan is capped, and any grants that we do have does deplete our pool. So we have room available, but we are being very careful as to who we grant them to.
Thank you. I'm going to combine some of these, Rob, and just kind of categorize them as risks and challenges of the company currently and in the future. Do you want to touch on that?
Sure. I think other than, of course, the volatility in the markets we've seen since January, it's one that I've touched on before. The challenge with headhunting and the significant pressure that the US-based companies are putting on the Canadian talent pool here. We've seen costs of certain positions go up as much as 70-80% since January. This is like for us why it's, Tamer's done an amazing job with our engineering team to building a fine balance of senior and junior. That's enabled us to keep a good portion of what we do have, providing as much support as we can for these positions. But once again, it's all about human capital right now. We're seeing a tremendous amount of pressure, as I said, from US-based companies, waiving the US dollar, of course, and large signing bonuses. That's where I see probably the biggest threat for not just us and the company. We've also, as I said, as part of the refinement exercise, looked at shaping the organization. We've seen a tremendous ramp up in the last year for employees. Now, of course, with a lot of the integration work done and other exercises done, completed, we've made obviously conscious efforts to protect cash flows moving forward into this volatile markets and refined our team internally as well.
Thank you. That leads nicely into this next question here. What new measures is your team doing to protect cash flow and run rates? Annie, I'll direct this one towards you.
Yeah, sure. Well, we're doing a variety of things. We are going through each expense line item and asking ourselves if the return justify the cost. If it doesn't, and there's really no good reason, we are eliminating the cost. So as an example, we are going through our list of consultants to determine if there's any consultant that we no longer require. And we have terminated some consulting contracts after the quarter. With respect to subscriptions relating to technology and marketing that are auto-charged onto a credit card, we are going through our credit card statements on a line-by-line basis and assessing if we need it. With respect to marketing, we are going to better track conversion rates to assess spend. And of course, we are going to work hard to collect the outstanding receivables and recover our tax money, as mentioned earlier.
Thank you. Can you speak to the future M&A strategy? Rob, you touched on this a little bit, but they're saying assets grew significantly. So can you touch on this a little bit more?
Sure. For us, it's been about early stage foundation. Foundation and process is everything, because without that, the cookie crumbles, the tower crumbles per se. And we've made significant efforts over the last year to not only fill the puzzle pieces and the roadmap here, but more importantly, provide that interoperable infrastructure across the organization. And then, like I said earlier, sometimes this means pressing pause and focusing on opportunity and not being caught up into shiny balls, if you say that. There's a lot of distractions, there's a lot of great opportunity as to the viability of our products and the relevancy of our products, I would say, in today's market. We get approached by numerous different opportunities and directions each and every day. But once again, this quarter, as I said, has been kind of pivotal for us, is refining the focus and manner of where the dollars and cents go as to standing up opportunities and what the long-term impact looks like financially from a revenue perspective and EBITDA perspective as we move forward into next year with the various products of focus. The M&A opportunities now that we're looking at and considering are all cash flow positive standalone entities in the range of 4 to 8 million on an annualized basis. And for us, we'll continue to explore opportunities, as everyone can appreciate, with the volatile markets up and down. And as a result of COVID, private sector has seen a very difficult time raising capital. So it gives us the ability to keep on the forefront, as there's a lot of depreciated assets, of course, out there that will add nice line items to our revenue.
And you talked about some M&A opportunities there, but company-wide, what do you see as the biggest opportunities in the coming year ahead?
I think the biggest opportunities, as I said, on the year ahead, I think it's kind of three things in my honest opinion. I think Checkpoint has the ability to become a unicorn in itself as a product, as we've seen the two whales that we landed in the first 2 weeks of launch, and all of the significant opportunities that are in the pipeline as a result thereof. So most definitely Checkpoint I see is one of our big focuses. We're starting to now, I would say, become the leading global insurance provider for wallet passes in the insurance sector and banking. And I see that as one of the other tremendous upsides and focus of the company to go long and narrow on as well there. And then with 8112 to me is the wild card. That's really one of the biggest blue sky opportunities, and why we've been so heavily focused on not just educating shareholders and educating industry as forward-looking thought leader innovators, but really the significance of what this means in this transformative change that's going to come from the new digital 8112 standard. We're extremely well positioned here, Devin, from this perspective, and a great deal of time and focus and resources have gone into and will go into continuing to push that. I would say the fourth one is the TELUS contract that we have with our procurement deal. There's been a big reshuffle and alignment and focus on TELUS, and we're seeing some tremendous support now and focus on various different projects, opportunities within TELUS throughout their national sales organization. So I'd say those kind of for us are the key 4 focal points for now. And as I said, is we do launch relative new products and we'll continue to do so. I'm sure there'll be many different opportunities of focus that we see. And this is the manner in which we build things through the microservices model, that we put it out there, we see the traction or penetration, and then we double down, much like we have here with insurance and Checkpoint.
Great. And I'm going to wrap up as our half an hour is coming here with this last one. I've heard you say in previous interviews, we are where we are. You still seem very sure and confident. So what can you say to give us shareholders the same confidence and hope as to the future and viability of the company?
Well, for me, as I said here, this is it's a long game. I'm not here for a cup of coffee. And as I said, everything that we are doing is on the long-term value of shareholder and, of course, company's viability. And when we look at the big picture, it's just that, it's a big picture. Unfortunately, I own a home. I don't look and call my mortgage broker for an assessment every single day at closing of the business day. And I just don't get caught up in the volatility of the markets. They are where they are. We are where we are, is you are correct. It is what I say to my team on a daily basis. Doesn't matter how we got here or why we're here. It only matters for me as to the focus of direction and becoming stronger. And believe it or not, based on a lot of the comments I've had and phone calls and email exchanges over the last 48 hours, the company is in a very, very strong position. The company isn't the stock price. The stock price isn't the company. It is a common one that's you've heard before. But no, for us, the focus and refinement, and now the nice complementary addition of Annie and our finance team to truly maximize on the pricing and revenues moving forward, and more importantly, cash flows management. These are the key things. We've been heavily focused on having the senior management team realigned and refocused as to the long game from a product perspective and sales perspective. And as an organization, to me, I see this, we have many extremely agile, relevant technologies that are still well positioned for the future. The digital transformation is just starting. This isn't 1 quarter of down reported revenue and we're done, we're throwing in the towel. We're just starting this. And for me, this is why I'm very confident and very calm and poised, and don't get too rattled with some of the comments that I've received over the last 48 hours. I fully understand, people's opinion and respect those opinions. But like I said, all I can do is put the company in a position for long-term value. And with the pipeline that we have right now, pressing pause, as we've said, to ensure that interoperability across all of our platforms was the right decision, 100% the right decision. And without that, we would never truly recognize the value of the acquisitions of which we made.
Thank you. And thank you for everyone joining us today for Fobi's financial highlight webinar. Again, this webinar will be posted on the Fobi website as it has been recorded. Before we sign off, are there any last words you'd like to say, Rob?
No, just for us, like I said, we're moving forward. We're very, very focused and positive. I mean, there's a lot of negativity in the world. Some of it is justly, sure. But like I said, for us, it is what it is. We are where we are, and we're in a very strong position to maximize on the digital transformation. And that's what we're here to do.
Perfect. Thank you so much. And thank you again to everyone. Hope to see you on another webinar in the future. Have a good rest of your day.